Welcome to Streams of Income, hosted by best-selling author and entrepreneur Dr. David Powers, where we discuss streams of income, passive income, residual income, and even why there are dinosaurs and zombies in this intro. Fasten your seatbelts and get ready to dive in.
Hey everybody, welcome to the next edition of the PIE, formerly known as Office Hours Time, now known as the PIE Education Hour. I actually just thought of that too. I thought this sounds pretty good. I may just start calling it out, the PIE Education Hour. And but before anybody says anything, it may not always run an hour, and sometimes I might go over. It just depends on what I break into in this book. So we've been talking about this book, Home Business Tax Savings Made Easy by Ronald Mueller. And it's pretty cool. I mean, I'm working on my own taxes right now, along with a consultant that I work with. And, just working on taxes, deductions, bookkeeping, all that. And it's pretty cool. I enjoy it. If you hate or dread tax time, there's got to be something wrong that you're doing. Or I would ask you if we were live, why is it that you dread tax time? Because, I actually look forward to it because of the way I structure my taxes, the way I've structured my business, my deductions, everything I do. I love tax time. Another thing, aside from what I get back in credits and deductions and things of that nature, is one of the things I love about tax time is it helps me do analysis for the coming year for my business because I'm forced to look at all the numbers. I'm forced to look at what I spent, the cumulative action of what I've spent money on all year long. And I may see things that I need to change. I may see expenses that desperately need to drop. I may see, something I looked at this year because I'm working on it this week is particular income streams that aren't performing where I want them to. And I'm just going to drop them, just ditch them. I've already done that with one of the things that I run, one of my income streams, just completely liquidated pretty much all the inventory that was within it and dropped it, and so that I would have more time for something that is producing more income. Just because you're making a little bit of money doing something doesn't mean you need to keep doing that thing. If you're having fun and you want to do that, by all means, keep doing it. But if you're trying to scale up or you have new ideas that need to find some time in your schedule and in your life to be able to do, then you need to just drop those small things. And that's not just me or small business tactics or anything like that. Heard that advice from Jack Welch I think Jack Welch, what was he, General Electric? I think it was Jack Welch. I probably should have checked that out before I started talking. But what he would do is every year they analyze things, and I think it was 10% that he would drop, the lowest 10% of things coming into the company, things they made, product lines, services they did, they would drop that so that they could increase the things that were bringing in more profit. It would help tremendously if small businesses would do more of that. Drop the hobby things and the things that you think are cool or you think are fun or you think it's going to hit big one day, because we don't have all the time in the world to do everything we want to. All right, let's dig into the book. So right now we're looking, I'm on page 34, looking at some of the myths in regard to taxes. And even though I'll say this every time, even though this is Home Business Tax Savings Made Easy, most of this will apply to just small business in general. But what it also teaches us is that if you're a W-2 employee or you're doing something along those lines, maybe a contract employee, that kind of thing, you can start a small business at home. You can do it at home and take advantage of some of these deductions and tax savings. Now, for me, I am in my home office in my basement. This entire section of the basement is my home office, dedicated solely to business making activities. And unless my kids run through, occasionally they do that. But I don't quit working just because the kids run through. So it's my office. Because of that, though, I can take a certain amount of deductions for using home space as my office. All right, but myth number one. My tax guy told me that I have to show a profit in 3 out of every 5 years or else I'll lose all my tax deductions. Now, this was written in 2013. Like I say, it's an old book. Some of this might need to be updated, but here's the thing about this is there have been some extremely humongous businesses built since this book came out that showed a loss for a very long time. I think, well, Amazon was around before this book came out, but Amazon showed losses for a long time, and look where they are now. Uber, I think Apple has showed, well, I know Apple showed losses in the old days. Probably not since the iPhone came out, but, so many losses in the old days. They fired Steve Jobs. And so obviously that's not true. That's a myth. But the truth is, and Ron Mueller doesn't mince around with the words. He says that's pure garbage. To qualify as a bona fide business, you only have to prove your intent to produce a profit and to work the business actively and regularly. You can potentially claim losses year after year with no specified limit as long as you can prove that you have the intent to produce a profit and are actively working toward that goal. So he also says, though, because I'd always heard that in times past, where does this 3 out of 5 years idea come from? It actually came from an internal IRS document, which said that, let's see, if the taxpayer's business has been profitable in any 3 of the past 5 years, they're presumed to have a profit intent. But that's an internal document. That's not the rule. And so here we go. Let's see. Myth number two, I can only write off a room and equipment and furniture in it if I use it exclusively for my business. The truth is, all right, that's the exclusive use rule, which does apply to home office deductions, but you do not have to use an entire room exclusively. You can use a visually identifiable space, meaning a portion of a room that looks like an office, although that area must be used exclusively for business. Even if you have a one-room apartment, you can put a table in one corner, put a computer, printer, and phone on the table, pull up a chair to it, and guess what? It's a visually identifiable office space. And so that's pretty interesting. But, he may get into this in the book. I did hear him say in the seminar that I went to that Ron spoke at, he actually referenced a wedding photographer that had near their office, in front of their office, I forget where it was, but in their home, they had samples of wedding photos that they had taken. And these wedding photos were on the wall in this area. And so because of that, it was basically, I don't know, what would you call it? A gallery for the work that she did, part of her office, because clients would come over. She would show them the gallery of the work that she could do them so they could see the quality and the caliber of the work. And because of that, they were able to deduct the wall space and a reasonable walking space in front of it. And that way the clients could, walk through there. And that was the wall. There weren't her family pictures on the wall. There weren't random paintings on the wall. That wall and the space in front of it was used exclusively to demonstrate her work. And so, that might seem a little iffy to some of you, but I have heard of people claiming that also for bookshelf areas, the bookshelf and the space in front of it for research books, that kind of thing for their business, or to store inventory, if you sell books, things like that. So interesting, but that one, this is a good spot where I should always say in these that I am not an accountant. I do not work for the IRS. I'm not a tax professional. If you have any ideas, questions, concerns about any of this, and definitely before you do any of this, consult your tax professional, who is basically an undercover agent for the IRS. But I still have to say that. So let's move on. Myth number 3. I've been told the amount of my write-offs can't be greater than the amount of money I make in my home business. If I just started my home-based business, why bother with all of this for now? Yeah, because there are very few of you that are going to start a home-based business or small business with profit from day one. Any business, you're going to have to buy materials, inventory, equipment, hire employees, pay your own salary. I mean, there are going to be expenses up front before you start making money. Now, that's not always true, but that's the vast majority. So let's see, nearly all home business tax deductions can be applied against any source of income: home business, W-2 job, investment income, rental properties, retirement pay, etc. Let's see. Moving on through this. All right. 9 relevant factors. What does he refer? Okay, here we go. IRS auditors use 9 relevant factors to determine whether or not your business qualifies for small or home-based business tax deductions. And he actually references the IRS document here Actually, each one of these, he references the document and paragraph that this comes from. So the 9 relevant factors the IRS is looking for. Number 1, the manner in which the taxpayer carries on the activity. In other words, some examples he gives here. Do you have a separate checking account for your business? Are you tracking business income and expenses? Are you keeping records to prove your deductions? And do you work your business on a regular and consistent basis? All right, number 2, the expertise of the taxpayer or his or her advisors. So if your company provides, for instance, if your company provides training, including Zoom calls like this, and you participate in them regularly, your conference notes and notations in your day planner will help document your effort to establish expertise. So to make that even more plain, that was Ron's plain English translation of the IRS document. But you must show that you're actively learning and trying to get better. And so if you are trying to start a business and you're listening to this, hop onto your Google Calendar or whatever you use. I document so much stuff that if I ever get audited, I'm gonna drown an auditor in paperwork and digital files. But while you're watching this, just pick a color code on your Google Calendar. This is the way I do it. You can do it differently if you want to, but just write in on your Google Calendar. What I call it, the Pi Education Hour. I already forgot, but just write in Pi Education Hour. Dr. David Powers, Home Business Tax Savings Made Easy, class number 3. And this class, whatever it is, half hour, 45 minutes, whatever, round up, always round up. If I go 31 minutes, you put it in there for an hour. And that will show that you are trying to become better at your business. It show that you're actively learning and you're trying to become even more of an expert in the thing you do. And so very important that you show that. All right, number 3, time and effort expended by the taxpayer in carrying on the activity. So his plain translation of this means set a schedule of working hours and days for yourself. Make notes in your day planner or scheduling diary to record when you worked and what you did. This is very easy for me because like I said, I notate everything. Me and my daughter were working on publishing a book earlier and adding a book to the publishing house that I run. And so I documented in there when we started and when we got through. And then when I moved on to the next activity, I documented that. I do it not just for the IRS, but I like to look back to when I did things. I also look to, sometimes I need to research back and find times that I need to bill clients for when I work on things for consulting, things of that nature. But the documentation is there for no matter what reason I'm using it for. My working day tends to be from 9 to 4 every day, on average. There are times in there I take off for lunch, and there are a lot of nights where when the kids go to bed, I'll get out the computer and work even more. But I have what's considered regular working hours. And so even though you're an entrepreneur, even though you want to set your own schedule, set your own time, I guarantee if you're a good entrepreneur, if you're a small business owner that is trying to get better, you will find certain times of the day and certain days where you're better at the thing you do. You have a better energy level, your cognition is better, you can focus better, however that works for you. I work best during the day when the kids are busy with school, not in the evenings because my kids are doing sports. I want to be at those sports. I'm usually doing more physical training myself in the evenings. The late evening, I'm watching TV. I love that's how I relax, is to sit down and watch TV or read a book till I fall asleep in front of the TV screen almost every single time. All right, number 4, the expectation that assets used in the activity may appreciate in value. So a simple business plan producing monthly and quarterly profit and loss statements and having written strategies for business success. And he says here, even simple statements of objectives and your reasons for setting and pursuing them will help prove that you expect your business assets to appreciate in value. And by assets, it doesn't just mean property, houses, cars, collectibles, any of that. The business asset, it's the business itself. And so, like I said, right here, just the expectation, if you're setting goals, and specifically if you're setting financial goals or money goals or projects accomplished goals, document that stuff. Document it on your Google Calendar. I suggest usually just the Google Calendar because that way it's all in one place. If I ever get audited, the first thing I'm going to do is I'm going to go back to my Google Calendar. I'm going to print out the archive, and that's going to be probably one of the largest things, digital file, whatever, that I hand over to an auditor. They're going to find all this stuff in there. All right, number 5. The past success of the taxpayer in carrying on other similar or dissimilar activities. See, that's the IRS for you. They could have just said in carrying on other activities. All right, if you have any examples of successfully running a profitable business in the past, that will be a real plus. And so, I mean, I can easily go back and document jobs I've had where I did similar activities. I mean, if you can go back, let's say you start a business selling something, product or service, you could go back and prove that maybe you sold, I don't know, replacement windows or cars or houses, or you sold retail and you're like employee of the month for 15 times in a row. You've proven that you have past success carrying on similar activities. But here the IRS actually says dissimilar activity as well. So theoretically, as long as you could prove you were successful in anything, I mean, I could go back to my military service and prove my success in leadership. I could show promotions and awards and things like that to say I transferred those skills, learned, practiced, and experienced under austere conditions into my business. And so there you go. All right, number 6. We'll finish out these 9, and then I'll go ahead and stop the recording here because we're moving into chapter 3. All right, number 6, the taxpayer's history of income or losses with respect to the activity. So if your business enterprise loses money year after year, just be prepared with a good explanation. Why? Now, for us, it's almost a little bit easier right now because you could easily go back to 2020 and 2021 and blame anything you wanted to on COVID. There are businesses, I mean, my best income year was 2020 because of COVID. But if you needed to cover some losses, or not cover, but explain some losses, it's super easy right now. There's also been horrible, interest rates, inflation, recession, depression. I mean, just go back, find the official terms for particular years that you're talking about. If you, like my dad has a construction business that's been around for nearly 40 years. And he could go back and show how, losses during the 2007, 2008 time period when the housing bubble burst, all the things that he could go back and do. And so, just be prepared with a good explanation if you do have losses. It's not always a bad thing either. It could be that you were reinvesting your money into the business itself. And so because of that, the deductions, the expenses, things like that outpaced the profits. But that's a good explanation because you are actively working in the business with a plan for continued success, relying on past experience in dissimilar or similar activities to project future earnings. And that's why you had a loss. There you go. That sounded really good. Feel free to take all that wording and steal it for yourself. All right, if your business losses are decreasing in size each year, that trend will help you because it will show you that you're getting closer and closer to profit. And I'll tell you, if you do ever get audited, most of my notes and my records are just that raw information. I mean, they're well organized, but it's raw information. If I ever got audited, you can guarantee I would present everything that I have, everything I do in very concise reports with charts and graphs and pies and percentages and spreadsheets and everything well organized, and just that it shows just what an expert I am in running a small business, even if it's showing a loss. All right, number 7, the amount of occasional profits, if any, which are earned. Some people will tell you that producing any profit, even $1, will help prove your profit intent. Don't believe that. All right, so number 7, the amount of occasional profits, if any, which are earned. So you do need to show income. It's best, at some point to show profit, but you do need to show that you've earned income. And like I say, if you're not showing profit, you're showing loss instead, have a good explanation for that. Oh, another thing I just thought of too that provides an easy excuse for any explanation, because I opened up a hip campsite this year. We actually opened up 2 hip campsites here on the farm. And so one of the things that really affected us was Hurricane Helene. And so Hurricane Helene, I mean, we were without power for 8 days. But the destruction here is still easily seen. I mean, matter of fact, they're one of the biggest trees on my property, a huge pecan tree that we had the kids' swings and everything in, is still sitting on the ground in my front yard. Now it's been chopped up, and we're hoping to actually make some lumber out of it at some point. But there's still a very visible example of what the disaster did to the income here on my farm. And so disasters. If you are anywhere near Los Angeles during the wildfires, anything like that, I mean, it's a very easy and relevant excuse. So document things like that. Document, like I said, yet again, the Google Calendar or whatever you use. But for me, I would document probably a few days leading up to Hurricane Helene. And I'm going to put a notation in there because days leading up to a disaster like a hurricane, it's impending. And so people change behavior, they cancel trips, they do things differently. They're not buying things because they're worried about evacuations. And, would I lose money if I do this? And even me, I grew up on the Atlantic coast and well-versed in how hurricanes screw things up. And so let's say I was wanting to order something, whether it's from a business, personal, anything, I wouldn't order it if a hurricane's coming because I don't know if it's going to get lost in transit, if the post office where that thing is, or the Amazon storage facility, the Amazon warehouse where that thing is going to get demolished. And so my order would take even longer. And so if you're the small business that somebody's not ordering something from, that disaster has affected you. And so even if you're not where the disaster happens, it may still affect you. And so if there's any chance that disaster has bothered you, log that in as something that might help calculate why losses happened. All right, number 8. We're getting close to the end, close to wrapping this thing up for today. Number 8, the financial status of the taxpayer. So you actually get more slack. Now, this is Ron's words. You actually get more slack from the IRS if you do not have a fat savings account or inheritance money to live off of. When it is obvious that you have to make this venture profitable in order to survive financially, they'll know you're working to make a profit. In other words, you don't have a plan B. You don't have anything to fall back on. This business has to work or you're going to go hungry, or even worse than going hungry, you may have to go out and get a W-2 job. And so the IRS realizes you got nothing to fall back on. And, even like me, if I have my emergency fund, my Dave Ramsey emergency fund to fall back on, document, what is an emergency, why that has to, so if you do have money, kind of according to the IRS, have a reasonable explanation why that money cannot or should not be used to fund your business. And so it's better if you don't have a fallback, but I'm telling you, always work towards having a fallback. If nothing else, like Dave Ramsey says, the 6 to 12 months of an emergency fund. All right, number 9, elements of personal pleasure or recreation. Well, interesting. All right, so if you work your business on the golf course, for example, that's fine if either your business involves selling goods or services to golfers, or you have a track record of success that proves, now I like this one, that proves that the golf course is a fertile field for prospecting. So in other words, even if there's an element of personal pleasure or recreation, it's like anything with the IRS, have a reasonable explanation prepared for that. Now, this might not be something I would already have documented, and it's on a computer file somewhere over there or whatever, but be ready for that. And so for me, with all the streams of income I have, a lot of what I do can be chalked up to being what's called nowadays a lifestyle business. And so there are certain deductions that I take that for so many gazillions of others of people and small business owners out there, there's no way they'd be able to do it. I'll give you an example. Also, let me finish what Ron said, and then I'll give you my example. It says, otherwise, the assumption will be that you're in business simply to be able to write off your golf expenses. And so you don't want it to appear that way. In other words, what am I going to say? I bet some of you can guess what I'm going to say. Have a reasonable explanation ready. All right, so one of my streams of income is coffee. I have a website called thecoffeescholar.com. And so I'm a huge coffee nut, but I love I don't know, the business, the intricacies of coffee. And so I have this website, and it's built as an affiliate website. So in other words, there are tons and tons and tons and tons of links on this website that bring me affiliate income. In other words, when I try a new coffee, which I purchased, and so I deduct that purchase off of my taxes, I buy a coffee, a bag of coffee somewhere. Let's just say I'm going to buy some Rwandan coffee from Land of a Thousand Hills in Roswell, Georgia, which I've done before. So let's say I buy a new bag of some single origin Rwandan coffee from them, and then I take that coffee, I make it, I enjoy it immensely, which there is an element of pleasure or recreation. I've enjoyed that coffee immensely. It helps me work faster because caffeine is a wonderful supplement for that kind of thing. And so I take that coffee off of my taxes, but I'm doing a review on that coffee. I'm doing a YouTube video based on that coffee. I'm going to have quite a few social media posts based on that review that my VA is going to put together for me. And then all of that is going to end up on the Coffee Scholar website with affiliate links. It's the intent of making a profit. My goal is to make so much money off the YouTube videos and the stars or whatever they're called on TikTok when I do the videos on there. I forget whether TikTok or YouTube has stars. But my intent is to make so much money off of the various streams of income I have built into that coffee business that it way, way outdistances what I paid for that bag of coffee. And so that bag, I don't know, let's say a 1 pound bag of coffee might cost me $20 from there with shipping and everything. And so my goal is to make so much more than that. I want to make way more than that off the affiliate income and everything else. It's the intent to make a profit. And so that's a deduction under that, the Coffee Scholar stream of income, that business that I have. And so way more examples that I could give. I would love, though, I see on the videos a lot of y'all are watching these inside of the passive income engines, but I'm not getting many comments on these. So if you have any questions, feel free to post the questions under the videos when I post them, or even better, I like this even better, is post your question as an individual post inside the Facebook group from you, and that way it's not under the video, but it's from you, and that way it'll show up to more people. Because I guarantee if you have a question about anything I'm talking about, other people probably also have the same question. They either didn't want to ask, forgot to ask, didn't know how to ask. So many answers for that. But just feel free to ask any questions, post them as a separate thing there. I get all the posts that come through passive income engines, and so I'll be sure to answer that. If it's however, if it's very personal or something like that, or you're a little hesitant to ask because you don't want I don't know, maybe you're afraid there's an IRS spy in the group or something, which I don't think there are. You never know, but I don't think there are. But if it's very personal, you're welcome to email me, Dr. Dave at redteamgoals.com, or everybody gets, you should be getting them, the weekly emails, I don't know why I said that weird, the weekly emails I send out from Passive Income Engines to all the membership. Just reply back on that, and that'll come straight back to me and ask me your question. And if you're worried about it being confidential, just tell me straight up, first line, Dave, this is confidential, don't tell anybody else, but I was wondering if, and I'll tell you what I think, and also tell you, be sure to consult your tax professional about it before you do anything, but I'll be more than happy to answer any of those questions. All right, so I'm going to go ahead and wrap up. Next week, we'll be delving into chapter 3 in this book, and I'm excited about this. I don't know about y'all, but I get excited at tax time because it's fun for me. It helps me do planning. It helps me see what I've done right or wrong in the past. I'll be honest with you, sometimes I see that, I made more money than I thought I did, or when I start running charts and graphs, I'll see that, okay, that income stream is coming up big time. And then I'll want to look and see what's changed, what's different. One big increase for me last year versus previous years is that affiliate income has gone up. I usually do most of my affiliate income comes from Amazon. And so, they don't pay well, but they do pay. And but I've also been trying to zero in on fewer affiliate programs, affiliate offerings that I make, but some that I talk about more. They're actually more personal to me. Like, for instance, a financial program that I recommend from some friends of mine, things like that. And so I hope you all have enjoyed this. If you have any suggestions or any particular specifics you want me to cover in the future, be sure to let me know. I'll bring that in as well as I can. All right, y'all take care. Hey, everybody, I just wanted to mention one last time before you go, if you ever want to do any brainstorming, let's say you listen to one of these podcasts and you thought to yourself, Dave, that was an amazing guest. And your interview questions were so thoughtful and introspective and inspiring. It made me think about something new, but I don't have anybody to talk to about this. Well, that's what I'm here for. If you ever want to do a brainstorming session, I don't charge the same price for those that I do my regular coaching sessions, because the coaching sessions are, that's like a long-term thing. I work with people and hold their hand and tons of homework, stuff like that. But if you ever want to just get on a call and do some brainstorming, I love doing those. I love meeting new people in different occupations, things that I don't know anything about, and have them tell me all their secrets, all their goals, all their dreams, and we brainstorm new income ideas. And you know what I really like? Let me tell you a secret. One of the things I really like doing is helping people see how they can make additional income or create new income streams based off of things they're already doing. In other words, don't add another job. Don't take on another part-time job. Don't add 15 side hustles to your existing income streams, or stream, if you're possibly in a full-time W-2 job. What I like doing is brainstorming with folks. It's like my specialty, and helping them figure out how to make money, more money, new money, sometimes passive money, with things they're already doing. And so if you want to do a brainstorming session on something like that or anything else, I mean, I don't mind talking about anything. Getting your kids into entrepreneurial stuff, trying to work with your spouse because they hate entrepreneurial stuff, whatever you want to talk about, click the link below. It should be in the show notes. I say below. I'm not sure how you're watching this, but it is in the show notes, whether those are on the side, below, or somewhere else. But check the show notes. There's a link in there for the $99 brainstorming sessions. And, if you want to, feel free to email me. Ask me if it's the right fit for you before you book, whatever you want to do. But just be sure to get the help you need to make sure that you're able to take those next steps toward your income streams.